everyone's good. Welcome back. This is episode 3 of a beginner's guide to technical analysis. So we're just going to jump straight into it. This video we're just going to talk about bullish and bearish trends and trading in the range. So if you watch the last two videos, you'll have a decent insight what I'm on about when I'm on about bullish trends and bearish trends. So pretty much there's just two types of stock market structure. There's trending markets and there's going to be ranging markets. Trending markets is just when the market's going in a definitive direction, so a clear direction, so either an uptrend or a downtrend. Ranging markets can be a little bit difficult to analyze. Pretty much a ranging market is just going to be where the price is kind of just bouncing up and down and the price is consolidating, not much buying and selling is happening. So what we'll do, we'll go through a few examples here. We're going to jump on ticker MOS. Just by looking at this screen, can anyone tell us what is going on? What do you think's happening? You think this is a downtrend, an uptrend, a range of market? I can give you a little time to pause, have a little think, and then come back. But yeah, so what's happening here is it's ranging. So we're just going to get a horizontal line out. You can clearly see this top level of resistance, multiple rejections, and then you can just see roughly on this $22, $23 level. So there we go. As soon as you draw your horizontal lines, you can see clearly price is coming off this $23 level, ranging up to 28, coming back down to 23, back to 28, 23, 28. So really in ranging markets, you're not really supposed to trade in a ranging market. It's a lot easier to take a trade on a clear uptrend or a clear downtrend if you're shorting. Ranging markets, it's quite hard to predict what's going to happen, okay? Multiple touches is obviously stronger conviction. I would say if you're more looking towards a day trading approach on a smaller time scale, so maybe if you're on your 1 hour or your 30-minute, you can take a good trade. Multiple touches on the bottom or the top can be a clear indicator, but range of markets, right now I just want you to identify them, not really trading them. So this example is literally a perfect example of a range of market. We'll go on to the next one. Bitcoin's done it loads recently. So straight away we can see, if we get a horizontal line out, pretty much, yep, we're coming down to that 92k mark. And we were always just bouncing off that top level, 107. So you can see, Bitcoin obviously had that massive bull run, broke through, one touch, coming back down, 2, 3, 4, multiple touches, back to the top, back to the bottom. So that's just another really good example of trading in the range. I was looking at this one, I remember this ticker back in the day, RKT. We're going to use this, quite a good example, we'll go through a good analysis on this one. Straight away, I'm going to go back a little bit here, get the line out. You can see when we had this big push up here. So around that $14 mark. You can see probably most amount of volume this is ever. Yeah, look, 9 mil candle, 10 mil candle, so massive push up, okay? And we rejected this $14 level. Come back down, another touch, reject. I'm just going to draw some rectangles here so it's a bit more clear. So you can see one touch on that $14, and then we've got another touch on the $14, multiple touches. So you remember from the last video, this is a stronger conviction. So you can see sellers just keep jumping in here. Every time it touches $14, push this down. Look what happens though. Soon as I break through that $14, massive bullish candles. Okay, 11 million volume, 7 million, most amount of volume it gets. So it pushes up, and then we can see we're in a clear uptrend. And then again, what I want to take from this as well, you can see we're clearly trading in the range here. So we're just going to draw this down here. Because again, alright, trend lines, market structure, they're not ideally going to be always smooth, okay? You're going to have to identify them. Some examples have shown you really clean, smooth setup. So you can see this isn't ideally in the range. It does kind of hit that $14, come back down to that $10 mark. But you can see in this period, we've got one touch. Yeah, we'll fall back through. But then we've got another touch. Trading in the range, touchdown here, touchdown there. So you can see clearly trading in the range. And then when we do break through, that's going to be a good trade entry. So we can clearly see we're going to the upside here. Bulls are in control. So yeah, I just want you to have a go now, just kind of identifying some market structures, going from the two previous videos when we're doing uptrends and downtrends. I just want you to add in, find some tickers that are trading in the range, just so you're now familiar with trading in the range, uptrends and downtrends. So that's going to be it, guys, for episode 3. Cheers.